Well, let's get more now on that story and the market reaction with Simon Michell from FIIG Securities. Simon, good morning. Firstly, how did bond markets finish the week following that data?
Yeah, good morning. Well, look, obviously after that data came out on Friday night, we saw a bit of a reversal of that January trend of rates moving lower, and we saw rates move high. The US 10-year yields finished around 2.8%, still lower than the peak in January of around 3.09, but obviously moving higher, and that's also been reflected here in our domestic market.
So what are you expecting then from the Australian bond market today, given that overseas action?
Look, I think the Australian bond market today is going to be looking at rates moving higher. We're actually seeing the 10-year yield move higher this morning. They're obviously looking at the statement on monetary policy released by the RBA on Friday, as well as news out of the US, and that all really points to those rates moving higher, pressure being on for higher rates.
And how have investors really reacted to that RBA statement? There were, of course, two last week, first on the cash rate and second, the statement of monetary policy.
That's right. Well, I think the big point there was this period of stability in interest rates. I think that can be seen as quite positive. The RBA statement indicated that they're seeing improvements in growth, and they expect that to continue through 2014. That's positive for rates. I suppose that's offset by the inflation view, and obviously the RBA has indicated that they expect inflation to drift up to the higher end of the band, around that 3% through 2014. That's going to bring some inflation in, obviously coming through from that dollar drifting lower. They hope to see that dollar continue to drift lower and be positive for manufacturing. That's going to continue to keep that inflation high.
A number of data points due out this week. Simon, what are you keeping an eye on ahead?
Yeah, look, employment's the big one. Obviously, the RBA noted in its statement that employment growth was weak, wages growth was also weak. So they'll be looking to see how the employment data comes out, as will the markets. That'll be the next big data that we get out. We're not expecting a huge change there, possibly a kick up by a point in the unemployment rate, but pretty much steady as she goes.
And where do you think investors should be focusing this particular week?
I think investors are just getting used to the fact that the RBA is looking at a steady period of rates for the 2014. So those investors that were expecting rates could fall lower are reassessing that view. And our investors are certainly looking to lock in a good fixed yield. If rates are going to be fairly low for a period of time, it's about locking in a nice margin, a nice level of income.
And Simon, just lastly, we've covered a bit this morning this idea of a reverse rotation back from equities into bonds. Are you seeing any evidence of that from your clients?
Look, we've seen that over the last week or so, I must admit. I think that now that there is a view that rates are likely to remain steady, people are looking at locking in a longer view on their performance in relation to income. I think people have been taking some profits, and they're reassessing the level of potential for growth in the economy as well. So it's really about locking in income and also some inflation protection. If inflation's going to drift up around that 3%, that's going to start to really impact on term deposit rates. So investors are looking to how they can minimise the impact of inflation on their portfolios.
And just on the broader picture here, the CIO, the Chief Investment Officer of BlackRock, Rick Ryder, coming out on the weekend and saying there simply aren't enough bonds out there or fixed income products, and the ones that are there aren't providing enough income for people to retire on. Do you share those concerns?
Look, we believe that there's a very, very broad market of bonds out there. I mean, obviously there's been tremendous issuance into the space. I think there needs to be a greater understanding of the different structures of bonds available out there. As I mentioned, inflation-linked bonds, they're paying significant returns at the moment. We'd also like to see the growth in the bond market and see more alternatives out there for investors, but we're certainly seeing some great opportunities out there for investors to be able to lock in a decent form of income and also inflation protection in this market.
All right, Simon, we do have to leave it there. Thanks for your time this morning.
Thank you very much.